9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with Annabelle Jewelers.
Our top stories, and we're counting down, of course, the open of markets in China this morning. But treasuries are rising across the curve as trading resumes, with private sector jobs data boosting bets on a Fed rate cut.
SoftBank in focus after selling its entire Nvidia stake for almost $6 billion to bankroll AI investments. Its shares taking a dive in Tokyo after earnings.
Also ahead, Chinese retailers reporting strong numbers during this year's Singles Day shopping festival. JD.com says sales jumped to a record.
And deadly explosions in the capitals of India and Pakistan raising concern of renewed tensions between the nuclear-armed neighbors.
Alrighty, taking a look at the market action this Wednesday morning, and you can see really quite a lot of positivity across the screen. There's different themes that are playing into this, but I do want to start here with one of the most important we're going to be watching today, and that is SoftBank, because you just saw there those shares that are very much under pressure in the first hour of trading. It's been an interesting move because you have seen that huge run up in SoftBank over 2025. You're looking at around 150% of gains overnight or yesterday. We had very strong profits for the second fiscal quarter. We also saw SoftBank offloading its entire Nvidia stake to try and finance its AI investments as well. So today in the session, really not tracking what we saw for ADRs because it was a jump of around 7%, but under pressure and maybe just a little bit of profit taking as well. So tech generally is going to be another key theme because you've got the likes of Hesai, for instance. They're going to be reporting earnings after the bell today. But again, fairly steady as we await that. And tech generally is a bit under pressure. Asian equities, though, are moving to the upside. And this is really that theme we had on Wall Street overnight. The US government shutdown. Maybe we are finally nearing an end on that. And traders are very much clinging to that optimism. So you saw that as, again, playing into the session. The other dynamic as well was some private sector jobs data in the US that showed a cooling US jobs market. And so there's that expectation, yes, that case is building. The Fed can continue its easing. So you're seeing Treasury yields, for instance, that are moving a little bit lower across the curve this morning. And that is also playing out what you see across the Antipodeans and Japan gold there, looking fairly steady so far. That's the broader theme that we're tracking today. Let's take a look as well what's happening in the China space, because e-commerce is going to be one of the big sectors to focus. Consumer data or consumer sales data yesterday was the watch, but overnight we had JD.com, for instance, reporting very strong Singles Days orders. We don't know the exact quantity or the numerical value, but they're saying they more than doubled in some markets like Japan, Australia, Singapore, South Korea as well. So that ADR you can see here, listing rising in the session, bit of pressure on those e-commerce peers like Alibaba, Meituan as well, and Xiaomi, another name, because they did as well report their sales around 30 billion yen was their number. But also let's take a look, because we're heading into that China session today. E-commerce, as I said, going to be one of the key watches. You did yesterday see a bit of a drop in the CSI 300 into the close, and that was because this spectre of further controls around rare earths came back onto the agenda again. That trade truce, maybe, Yvonne, it's looking pretty fragile.
Yeah, we always knew this kind of after South Korea, but certainly you're seeing that, right? The enforcement side of things is what the market is really kind of focusing on a little bit more here today as well. In terms of what to watch in your agenda here today in Greater China. So Singles Day sales, as we mentioned about whether that does actually help in terms of some of the consumer names as well. Earnings. So the likes of Samsonite, SJM, Tencent Music are reporting their results as well. We are still in that window for credit data as well as we count down to that data dump at the end of the week. There has been some development when it comes to New World as well. So we'll talk a little bit more about how these sort of negotiations have kind of stalled in some ways here. So we'll certainly bring that up in terms of the financing and what the development is at this moment, and that one-year bond sale coming through for Hong Kong here today.
All right, well, let's get more on what's some of the key topics today, because we've got Paul Dobson's Bloomberg's executive editor for Asia markets joining us from Singapore. So, Paul, you're tracking a lot of different things this morning, but I think Treasuries is one of the standout following that jobs data or those private sector readings we got.
Yeah, so in the absence of more official data, this is all we've kind of got to go on at the moment in terms of what is the US economy looking like at the moment. I remember the big trade-off that the Federal Reserve is grappling with at the moment is how rapidly the jobs picture is deteriorating relative to how sticky is inflation, and which of those concerns is going to be more important will determine whether they cut again in December. The labour market data that we're seeing is not looking very promising at the moment. We're getting more of the bad stuff coming through. So the ADP numbers that we got, for example, showing weakness, and that's encouraging people to bet that the Fed will need to cut again in December. And so we're seeing that leg lower in bond yields again today. It's going to be exciting over the next 6 weeks or so, because we're going to have the reopening most likely of the US government, and we'll start to get some data coming through, starting with stuff that's quite ancient now, September jobs data, official numbers, stuff like that. Some of the data that we get or we might not see at all, because they haven't been able to tot it all up. But what we do have to go on at the moment is suggesting that the economy is cooling, that the Fed is going to need to continue to cut interest rates, and so the Treasury market obviously likes that.
Paul, this whole news of SoftBank selling its stake of Nvidia, the reaction is quite interesting, right? You saw Nvidia shares were lower. SoftBank shares are taking a bit of a dive here this morning in Tokyo. How should the market be interpreting this this transaction now?
Yeah, a really interesting one. I mean, SoftBank is portraying it as a future bet, take some profit out of the humongous gains that we've had in Nvidia and put it into the more exciting prospects that are coming up alongside it. The market is chatting a lot at the moment about the way that the technology sector is valuing this sort of future growth, what it's doing with, depreciation, amortization, what it's doing with the value of unlisted companies, including OpenAI, and how to exactly kind of price that at the moment. And there's a lot of unease at the moment, and that's why we're seeing this big increase in volatility in the tech sector more broadly, which we've seen for maybe 10 days or so now. Up and down we go. I think the broader market is telling us something pretty interesting as well here, though, because although we've got all of the tech sector down, the rest of Asia is having a good day. The advance versus declines is 3-to-1, 4-to-1 ratio. So the rest of the market is taking a little bit more support from the bets on the Fed cuts, even though tech itself is ailing somewhat today.
Paul, thank you. Paul Dobson, the executive editor for Asian Markets, joining us out of Singapore here this morning, and taking a look at how SoftBank is doing this morning as well, as we talked about there. That dive that we're seeing on the shares, right, after selling its entire Nvidia stake for $5.8 billion to fund its AI bets. Well, Bloomberg Intelligence thinks the company is set to deliver its most profitable year since 2020, with OpenAI investment gains driving results well above estimates. Let's bring in Kirk Boudry, senior industry analyst, joining us now. We'll get to the earnings later. I mean, I think what overshadowed all of this was this the stake that they sold on Nvidia. Good move, bad move, or is he going to regret it once again?
Well, that's an interesting point, but when I look at the reaction, when you have concerns about AI valuations, SoftBank is uniquely exposed. That's their whole strategy. Their largest assets are ARM and now OpenAI. So if there's concerns, then the stock's going to come down. That they happen to trigger that concern by selling their stake in Nvidia is maybe ironic. But when we were looking at how SoftBank has developed all the investments it's done, like Nvidia and other companies that they've invested in, like TSMC and Oracle, Intel, a lot of those are trading positions. That SoftBank, it doesn't have these as long-term investments in its vision fund. It has it at the parent level in a business that it set up back in 2019 just to trade public equities. And what Masa did is look at that and go, I think I can make some money to help finance a lot of the things that I want to do. And that's why they sold the Nvidia stake, because they're going to invest $31 billion this quarter. So that $5.8 billion, helpful.
Clearly, a lot of their portfolio investments are doing really well, and you saw that reflected in the numbers, because it was just incredible the amount that was recorded, 2.5 trillion yen versus the estimate for around 420 billion. It's a complete mismatch. But I do wonder, firstly, what you make of the earnings, but secondly, sort of that boom-bust cyclone, that doesn't seem sustainable at all. It was just such an overshoot.
Yeah, OpenAI had a huge influence on the quarter, and I think that is the difference largely between what the street was looking for and what they delivered. That asset almost doubled in value between January and October, and they had an investment still to come of $22.5 billion that they agreed to at the January price that they're going to close in December, which is one of the reasons why selling the Nvidia stake makes sense, because they have to fund this tranche of OpenAI. And there's this issue like, oh, but maybe they're not as keen on the market, or they think it's toppy. But no, they're buying an investment that's already doubled. They're paying for something that's already doubled in value, basically.
They said that they're unwinding these positions to really pay for the plethora of AI projects, right? Whether it's Oracle, OpenAI, the like. What should we be looking out for next?
Okay. I mean, they will close investments in a company called Ampere, which is a chip manufacturer, and OpenAI. The other thing that they talked a lot about that didn't really get a lot of attention is robotics. So they spent $5 billion to buy ABB Robotics. That makes them, just on that basis, the second largest robotics company. On top of that, they already have $6 billion in other assets that they can combine with that that'll help them move to the high end of the market where the growth is. So we expect to hear a lot more of that in the second half.
All right, that was our Bloomberg Intelligence senior analyst there, Kirk Boudry. Thanks very much for joining us this morning. And I think it's been very interesting to track the investor reaction to this as well, because not everyone is so optimistic on the amount of exuberance that you see in the AI space. And I think Michael Burry has been someone that's been really notable on X just in the last few weeks. But the latest is this issue, or this warning that he's essentially issued about the exuberance. And he's talking here about CapEx and how maybe that could be vastly understood or misunderstood by the market. But this is here the tweet that you can see, and he's saying that massively ramping CapEx through purchase of an Nvidia chips or servers on a 2 to 3 year product cycle shouldn't result in the extension of useful lives of compute equipment. But I guess the point here broadly is that we're used to seeing sort of major investments into infrastructure, but what's different between, say, 19th century railroads or fiber optics cables back from the dot-com era is that GPUs and the Nvidia chips, really their life cycle is significantly shorter. You're talking about a few years here. So has that really been understood or appreciated by these companies just yet?
Yeah, Chris Bryant had a really good opinion piece about this, right? The shelf life is about, 5 years? So it's kind of like he compared it to like an iPhone, right? You're going to have to keep upgrading these models from time to time in order to kind of continue on, right? And so in some ways, it's almost like a huge recurring expense that these hyperscalers are going to have. It's good for Nvidia, but may not be good for the big kind of Googles in the world that are already splashing so much money into that space.
And one of the points he made as well that was super interesting in that column was just talking about how Wall Street's really used to depreciating sort of these fast depreciating assets like autos or aircraft, for instance. What's different, though, is how private credit funds are moving into this space as well, and then using GPUs as collateral to finance loans. And what's the risk of that, given you're just seeing an explosion of activity in this space?
Yeah, perhaps some things that all those AI bulls are ignoring here at the moment. But yes, Michael Burry certainly raising a lot more eyebrows there in terms of this whole AI trade and where to next as well. But yes, we'll see if that continues to see any sort of pullbacks when it comes to the AI trade. We certainly saw that when he shorted Nvidia just a few weeks ago. Still ahead, going to break down China's market outlook there. Wendy Liu from JPMorgan, Chief China Equity Strategist, joins us. Plus, we're talking through some of the earnings that we're seeing in the China tech side. Hesai co-founder and CEO David Li joins us exclusively to discuss driver assistance technology and, of course, that bullish outlook that we saw for the fourth quarter. And we're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. Happy Wednesday. This is The China Show. All right, your renminbi fix just crossing the Bloomberg here. Still looking on the stronger side against estimates here. We're talking about 708 levels. So there, we have seen some strength of late there. But certainly the dollar is, this whole dollar carry trade, that certainly is back in favor once again. We'll talk a little bit more about that in the next hour. But certainly renminbi, that certainly will be in focus here, the strength of whether we can continue this resilience.
Yep. And let's also shift to what's going to be the big market story today, or one of the big market stories, and that's JD.com, because they're saying that orders during this year's Singles Day shopping festival jumped nearly 60% from last year, and that includes a surge in overseas sales. So let's get more with our China correspondent, Min Lo. Min, I mean, we saw the reaction in the ADRs and also the downward pressure it may be exerted on the likes of Alibaba and Meituan.
Yeah, definitely. I mean, we weren't expecting such strong numbers, especially given the deflationary streak that we have been seeing. But I think what is masking the numbers is that we don't have the breakdown of how much exactly is the total GMV sales, especially from the domestic market, because a lot of that strong numbers is coming from their overseas push. They're getting double the amount of sales in markets like Singapore, Malaysia, South Korea, Japan, Australia, Thailand. They're getting triple the amount of sales in 13 foreign markets where they provide free delivery. 40% increase in shoppers, but it's not clear how much is the increase in the domestic market, but certainly that's helping to boost their overall numbers there. Alibaba, we don't have the numbers yet because they're extending the sales until end of the week, so until Friday, but Xiaomi did give us the numbers. They had about more than $4 billion in sales, and this coincides with what Alibaba had told us at the initial few hours of the campaign. They did say that consumer electronics were among the top selling categories. So iPhone's Apple 17 and Xiaomi 17, both of these were among the top selling items according to Alibaba.
Yeah, Alibaba, you spoke with them back then about deploying AI in all this as well, these new initiatives for growth.
Yeah, so they have a few things that I think would be beneficial for this year's growth. Sure. One is their AI deployment. So they have been incorporating a lot of AI-assisted algorithm that really help with their click-through rates, conversion rates, reducing the return rates as well, because now you can make semantic searches, not just product searches. So you can ask, what is the best gift to give someone who is depressed, for example. But the other thing that they have created recently is the Taobao Shango, which is flash deliveries that can reach your home in less than 30 minutes. And this used to be something you get for food deliveries, but now they're expanding it to items from shampoos to phones. They just connected Huawei stores, thousands of those stores connected to the Taobao Shango, and that created huge amounts of orders. So they clocked, I believe, 100 million new orders in the first 2 weeks on that Shango platform, and they expect this to be a major driver the next 3 years. 1 trillion yuan they're expecting in new additional transactions over the next 3 years from this channel.
Yeah, actually, I have to say I'm pretty glad they're extending those sales periods for Alibaba, because I still haven't got all my Singles Day shopping done just yet. Let's talk about another story, though, because the PBOC as well has been sort of dismissing these concerns over a slowdown in loan growth. So what are the details?
Yeah, this is coming from their third quarter monetary report, which is important because it gives us a clue as to what the PBOC is thinking in terms of monetary policy. So they have been downplaying the weak credit cycle that we have been seeing so far, saying that it is to be expected because the Chinese economy is transitioning from high-speed growth to high-quality growth. So they have been backing all these high-quality productive forces. They have been making more types of funding available, so companies can now tap into venture capital, into the bond market and equity market, so they don't need to get so much bank loan. But the other thing is also because a lot of the savings that people use to channel into real estate is now going into the capital markets. So, and the government doesn't necessarily want to continue propping up the property sector. They also want to deviate away from the debt-driven growth of yesteryears, right? So all of these contributing to the slow growth. And it seems like the PBOC's tolerance for that weaker growth is increasing. And Goldman Sachs is saying they're expecting the RRR and rate cuts to be pushed back to the next quarter because of this.
Okay, Min, thank you. Min Lo there, our China correspondent. With all things Singles Day, of course, that PBOC monetary policy report that came out as well. Well, Bloomberg has also learned that talks have stalled between Hong Kong-based developer New World and potential investors. And sources are saying that the impasse is over how much control the billionaire Cheng family is prepared to hand over in exchange for capital. For the details, let's bring in our Bloomberg credit reporter, Kari Sue Limburg. Kari, first of all, tell us a bit more about why we've seen these negotiations stall of late.
Yeah, thank you, Yvonne. So I think it really boils down to kind of the family's decision. They have given the investors basically zero clarity on what they are willing to provide and the details of any deal that they would be willing to accept. So that's left the investors with kind of essentially nothing to work with. And so what we are hearing from our sources is that until if they do not hear anything by the end of the year, it's very likely the deal will fall through. And I think for that matters tremendously, because what's at stake if the deal doesn't go through is in part kind of the family's legacy, right? And I think that's the real calculation they are making is, if we accept this foreign investing capital, will we maintain our stake in their family fortune, which is the company that they built up? So this is really kind of the struggle that I think we're seeing ongoing as these talks drag on.
Yeah, but as you say in the story, I mean, banks are increasingly reluctant to offer further support. So how crucial is it? And who's going to essentially call whose bluff first?
Yeah, I think in many ways, it's not really about bluffing. It's really about kind of time. And I think really the ball's in the family's court, because it's the investors who have been willing to engage. But at some point, their patience will run out, right? And that is slated to happen basically by year end, according to our sources. So what that really means is that if they don't get this type of capital, and banks are not willing to lend, they will have to look for alternative sources, and that could potentially mean insurance money, but it's really unclear what that would mean. It's very likely in some ways that this stalling tactic could simply be a way that the family is making a big bet that, hey, we can drag this on until kind of the sector, meaning the real estate sector, recovers, and then we can recoup some of our losses. That is one possibility too.
All right, Kari, really great reporting there. And just as we're waiting for New World to start trading, but it is certainly going to be a stock we're going to track at the open in a few minutes from now. So that was our Bloomberg credit reporter, Kari Sue Lindberg, there joining us and taking a look as well what pre-market activity is telling us. Could see a bit of a reversal, actually, because we saw the CSI 300 dipping into the close yesterday. But we are actually setting up for some positivity in the session. Going to be watching the tech sector in particular, given as we're just discussing there, those JD sales figures, for instance, from Singles Day. And generally, though, tech is under pressure, so another sector to watch. But we'll have more ahead. This is Bloomberg. Alrighty, taking a look at the pre-market session here. We are 4 minutes away now from the open, and we are setting up for some gains. Actually looking at positivity in the tech space. That maybe could be really the China e-commerce story. And when I talk about e-commerce, I'm talking about really two companies that have reported strong numbers so far. JD, absolutely the standout, but Xiaomi as well had some strong figures.
Yeah, so certainly that helps, right? Maybe a little bit of animal spirits back into some of these consumer plays here today, but take a look at what we're seeing in terms of the chip space. Mostly are lower here today. Huahong as well. We're down about 1%. XPeng, though, extending that rally that we saw. Certainly when it came to all this optimism about robo-taxis and the like. And certainly we'll be talking to Hesai coming up after their results coming through here as well, among other earnings to tell you about there. The open is next. This is Bloomberg.
Welcome back. You're watching the China Show this morning, and we're counting down to the open of markets here in about 40 seconds from now. And we are looking actually for some positivity in this session. Yesterday into the close, it was a bit of a different story because there was that risk around rare earth curves. Was the China looking to restrict the US further? That sort of came back into the session in a way, so it led to a bit of downward pressure, a bit of question marks over the fragility of that trade truce. But certainly, I mean, other focus in the session today, you've got the e-commerce story. That's going to be another key area to watch for China.
Yeah, the Singles Day numbers are looking pretty strong for some of these e-commerce plays. So certainly that's one thing to watch here. Also, I think we focus a little bit more on the whole AI trade, given what we saw with SoftBank offloading that stake of Nvidia there, which is sending the shares in Tokyo lower here. Does that kind of add to those kind of wobbles that we've been seeing and concerns around lofty valuations around the AI side of things? That certainly is one question that continues continues to linger on throughout the week as well. Not to mention when you talk about some of the data that we got on the U.S., still softer labor data, private data, right? What does that tell you about Fed expectations? That certainly is still one thing, because that dollar trade, that carry trade still seems to be coming back in a big way. And that certainly does have implications for the equity markets in general. Take a look when it comes to the open, though. We are moderately lower here today. CSI 300 is pretty much just lower by about 0.1%. We've broken below that 4,000 psychological level when it comes to the Shanghai Composite here, just slightly here. We'll see if that continues. But yes, you are seeing actually, though, when it comes to commodities, that's bid up. Crude's up about 2% in Shanghai. And you take a look at when it comes to some of these big, large cap names like CATL. And Kweijiao Maotai is also doing okay. Capricorn Tech, though, is lower by 1%. We are seeing the chips out of favor here today. Maybe it's the whole AI trade. Certainly, that's one concern. Let's flip the boards and see how Hong Kong is doing. Of course, we're seeing, obviously, earnings is going to be a big theme here today. We talked about Hesai. Samsonite is going to be reporting, SJM among some. HS Tech is on offer here. You are seeing a bit of that being dragged by Alibaba. That's down some 2%. Maybe we'll see how we're still waiting for those official numbers when it came to Singles Day sales for that company. So maybe we're still waiting for that. But you are seeing Baidu's down 1.5% here. Tencent, though, doing a little bit better as well. Keep in mind, though, this rotation that we've seen out of growth into some of these sort of value, that certainly continues, right? When you take a look at some of these stocks like AIA, HSBC, for example, those actually have been outperforming in the last couple of weeks or so. HSBC, once again, we're up about half of 1% here. And we're also focusing very closely on the chip stocks, right? So Hua Hong Semi, I think we're down for another fourth straight day. There you go. We're down 1.8%. Morningstar had a pretty interesting sort of report talking about how, the stock seems overvalued, unrealistic, the analysts say here, when it comes to expectations around growth and profitability, because what you saw in those earnings was that perhaps when it came to the AI sort of boom, that they might be less able to benefit from what they're seeing in the whole AI boom sort of things, given that their AI revenue was also just in the mid-teens, they say. SMIC is also lower by 1%. ASMPT also lower here this morning. You take a look when it comes to what is coming up. Hesai is certainly one in focus. We have the CEO coming on in just a few moments. So you did see fourth quarter net revenues rising close to about 40 or 67%. That is the guidance. So that is looking like maybe a bit of a disappointment. Take a look at how Hesai shares are doing. We are down double digits now to 10%, which is quite interesting. SJM, Samsonite, Tencent Music also reporting later on here as well, Belle.
Yeah, but as you said, a lot to unpack with David Lee, the CEO of Hesai, joining us in just a few moments from now. But you're talking about earnings. Let's also just sort of do a recap of where we are to date, because at this time, around 90% of the MSCI China index is reported so far, and this is really just breaking it down. So in terms of the misses, you're over 50% have missed on those expectations from analysts. Beats, you're around that 40% mark, and around 6% coming in line. But there are still some standouts. I mean, of that 90%, the ones we're really waiting for, the likes of Alibaba, for instance, is going to be very keenly watched, especially given all of its spending on AI as well. But that certainly is where we are today, Yvonne.
Let's bring in Wendy Liu, Chief China Equity Strategist at JPMorgan, and maybe get your take. How are you assessing this earnings season so far?
Earnings season, we got CSI 300 fully reported. So it did show a quarter-over-quarter improvement from 9%, 2% back to 12% if we look at Q1, Q2, Q3. So that pivot is a good one. However, if we look at the breakdown and what's expected, bottom up, based on single stock consensus, then except for financials, it's going to be quite a bit to make up in 4Q. And so I think this quarter, next quarter is a time people have to recalibrate what kind of multiples that they pay for these single stocks. The one bright spot from CSI 300 is that we did see signs of involution, anti-involution, being implemented. Hence, parts of the IT, material, and industrial universe showed better margins. And that brought around the pivot to 12% year over year.
So if you're seeing that sign of anti-involution policy starting to take hold, how do you then factor it into the valuation part of the equation as well, and what you're prepared to pay for some of these companies?
Yeah. So CSI 300 peaked at about 1.7 times standard deviation to 10-year average FTMPE. At peak, it could go slightly over 2. But we really need earnings to come through to support a higher valuation, and it's safer for it to go back to 1. So I think this pivot is a positive, and it's more favorable to CSI 300 because it's more exposed to manufacturing. And so we're waiting for the big index heavy constituents to report this next week, and then we'll have a better picture for MSCI China. MSCI China is a little bit more consumer exposed, and suffice to say that consumption has been sort of stable rather than in a big pickup. And then when we look at the different sectors, again, the hurdle is the lowest for financials to meet and beat in this next quarter.
It's been a sort of fierce rotation that we've seen all year, right? First quarter was all about DeepSeek, tech. Second quarter was more about new consumption, Pop Marts, Googles. And then third, it was biotech maybe. Fourth was just kind of the return to maybe tech shares once again. How do you grasp this sort of fierce rotation that we see, and how do investors, can they actually manage all this, this persistent volatility that we're seeing?
Yeah, I think the first half, it was really about innovation. So IT and healthcare was the leader, and then with a bit of communication services because gaming. Now when we look at it, it's really anti-evolution helping the material shares, and to some degree de-dollarization, so people go into gold and precious metals and etc. I think every quarter there is a regular examination of what's coming up next and what has gotten overvalued. Yeah. We do have a quantitative macro indicator that gives us a sense in real time where we are in the cycle of growth. So we have 4 quadrants: contraction, recovery, expansion, slowdown. And so I call them the winter, spring, summer, fall of the seasons, right? And so most of 2025 has been in the summer, but it's a very, chill summer. Early summer. And so when the spurt is pretty obvious into further expansion, the market responds. And lately, we've seen more pressure with high-frequency data being reported so far this month. So I think we have a pullback while still in the growth area, growth zone. And this is when defensive high-yielders respond. So on October 12th and 9th, we published something warning about, crowded growth and then preference for less crowded, high-quality laggards. And seasonally, there is also a preference for financials because the high yielders, they will be looked upon when the new insurance money coming in at the beginning of the year.
How does the international or institutional global money also play into this as well? Because some of those names you're talking about, sort of like the hot names, are more in the spotlight, I guess, than some of these underloved names. How do you sort of sell that idea as well?
I think for the longest, people look to China for consumption investment because it's a huge consumption market, $7 trillion US, at least, $5 trillion for the households. And so the preference is really for consumption proxies. And I think this year it started to broaden out a little bit to innovative ideas, advanced manufacturing, and particularly lately ESS. And what we also find is among the
ESS, energy storage systems. Very hot area. Yeah.
And so we know that, beyond the GPUs, there's a whole infrastructure that feeds into the AI age.
Is that the better play now around AI? Is the power, is the infrastructure, the cooling?
It's the CATL's new growth driver is ESS.
Yeah, people know, some parts of the world there's GPU but not enough power. Some parts of the world there's power but not enough GPU. There is a trend going on identifying locations where you could have GPU and power. So there is a real infrastructure boom going on. And then I think that's becoming more apparent.
In terms of what we look for 2026, I know you've talked about consolidation. What can 2026 bring? Then can we mirror some of the gains that we've seen this year already?
I think the sector-wise, it may be somewhat different. Okay. So we upgraded staples in on October 12th, and then downgraded healthcare, and downgraded consumer discretionary. I think structurally, IT is still the place to be, but near term, we're going to have some wobbliness as valuation works itself out. In 2025, the biggest thing that happened to Hong Kong China equities is earnings re-rated closer to historical parity, and at least for China, closer to the EM parity. Yeah. But it's really going to be about earnings. If I look at relative performance, since 21, China has been in a broad downward performance or underperformance vis-a-vis India through September of last year. And likewise for Hong Kong, downward performance vis-a-vis Singapore since 2000 up until beginning of the year. Yeah. But what will take it further would be EPS. The area that gave us a little bit of a confidence is that MSCI China's 12 months forward net margin is the lowest within APAC at about 5.2%. But ROE is actually not as bad. It's at about 12%. So that means the asset turn is quite efficient. Yeah. But can you at some point have a higher net margin, and therefore the ROE could be more standout? I think if that could be achieved, that would be a positive. But we can't make that call right now. It's something to watch closely.
I was going to get your take, because everyone says China is a diversification play against the global volatility that we see, right? The pullbacks that we're seeing among the global mega cap tech. I mean, we're seeing it in Korea right now, where volatility there has basically shot up once again. But then again, when you take a look at concentration risk, that we see that in China as well. How do you see this? Do you think that AI and this whole kind of theme of tech supremacy and tech self-sufficiency, is that a good enough shield to kind of inundate China tech from the global volatility that we're seeing around AI right now?
That's a very good question. I do sense in conversations with onshore investors that they become more sophisticated. They are more mindful of valuation also. So on the one hand, I think China's trying very hard to get the self-sufficiency going, but on the other hand, the product quality still has room to improve. And that will show up in the top line, in the orders. And I think it's a dynamic recalibration of where valuations are and where earnings and then revenues are. So we're in the midst of that process. Clearly, it gives greater confidence structurally for these sectors. And I think within tech, you have one that's exposed to the global AI supply chain, and the other one that's exposed to domestic self-reliance, and then also consumer electronics. And I think the last one has been a little bit more difficult lately, owing to consumer demand. And then the best one so far this year actually happened in the first camp, global AI supply chain. Yeah.
Yeah, and I guess going back to your point around the AI landscape can look different too, because China doesn't necessarily have the chips, but they've got the energy, and it's the inverse very much in the US, what we're seeing right now with that infrastructure build-up. But Wendy, thank you very much for joining us this morning. That was Wendy Liu there, Chief China Equity Strategist at JPMorgan, joining us for the Market Open this morning. But coming up, because this is one of the stocks very much under pressure so far in this session, down around 10%, but our exclusive interview with Hesai coming up after the firm says it will achieve its full-year target ahead of schedule. That's next, and this is Bloomberg. Hesai Technology says it expects profit to rise between 39% and 67% in the fourth quarter. This is the world's largest maker of LiDAR sensors that are used in cars. It also reported third quarter net revenue increasing 48% on year to almost $112 million US. And that's thanks to very robust demand globally. Of course, Hesai really being at the center of the LiDAR ecosystem. But joining us exclusively now from Shanghai is David Lee. He's co-founder and CEO of Hesai Technology. So, David, strong set of results. The share, of course, is under pressure this morning, but let's just get to the main takeaways for you. What stood out in the numbers?
Yeah, it's a super exciting quarter. I'll give you a few numbers. First, the first 3 quarters, we shipped more than 1 million units already. And that's like for Q3, 47% year over year on revenue. And this is also interesting. We tell the market that we already achieved the full year profitability goal by Q3, which is probably one of the surprise to the market. And I'm super proud because everyone is talking about the involution, and now we're actually achieving the goals ahead of the time. And then we have on the long range LiDAR, on the entire market, we have 46% global market share.
Hesai shares are down some 9% on the back of your optimism, David. I'm just wondering, why do you think investors are seemingly a bit disappointed in these results?
First of all, this is the first thing I do in the morning. I haven't called them. I don't really know. I have a few guesses. I actually think one of the reasons is that people seem too worried about the involution in the China automotive, as well as the decline of the ASP of the LiDAR. But I do want to point out a very simple fact that even though it's true, it's always the case that the ASP will slowly decline. But if you look at the history, like we've reduced the price by 99.5%, and we maintain our gross margin. What you should look at is whether this company is able to reduce the cost and greatly expand the volume, and then keeping the gross margin. The answer is yes, yes, and yes. I'll give you one interesting number, right? Obviously, the first 3 quarters are very good, and we're expecting the best quarter and yet to come by Q4. And the first time we'll be shipping more than 1 billion RMB worth of product. That's like a record. And the other record I would like to indicate is that we're expecting more than 600,000 units in 1 quarter. Just give you some perspective. 5 years ago, we're shipping about 1,000 LiDARs per quarter. So this is a 600 times increase in our capacity to expand the volume while keeping the gross margin. That's what I think is important. I feel like it's actually a good thing that we're able to reduce the cost while keeping the gross margin.
Yeah, let's talk about that ASP then. What's your expectation for going into next year, and what's the pressure or conversations you're having with some of your major customers as well? How much are they asking you to reduce prices?
What they always ask me is cheaper, cheaper, and cheaper. Right? So, but you have to look at it at a different angle. So, for the level 2 system, when we call that the invisible airbag and seatbelt, it's true that people always want your ASP to slowly decline as this is becoming virtually the standard for every vehicle, because everyone knows that it could save up to 90% of the fatal accidents. But having said that, what we do see is that a lot of customers are already making the decision to take it as a standard. We're working with really almost everyone: BYD, Xiaomi, Li Auto, Chery, Leapmotor, Great Wall, Chang'an, Zeekr, and all that. And the JVs of China, in China, the GM, Cadillac, the Ford, the Audi, the Smart, the Toyota. On top of this, what's interesting now is the ASP going up, which is when you just hear the statement, it sounds like a suicide, but hear me out. What's really happening is that for level 2 system, you're assisting the driver. Yeah. You're creating value, but people think it's maybe limited. But now we're talking about level 3 and level 4, especially level 3. We already have projects with multiple car makers, and level 3 is a completely different game in the sense that people are wanting more than just one sensors. They actually want one looking forward, and they want blind spot to wrap this vehicle around with 1+2 or sometimes 1+5, which means that now we're looking at from one sensor to up to 6 sensors. And the ASP is going from $200 to sometimes up to $500 to $1,000 as the entire content of LiDAR on the vehicle, which is super exciting because now the TAM calculation should be redone from level 2 to level 3 and 4.
And David, you know, when you guys had this listing, I mean, obviously one of the key sort of use of proceeds was going to be expanding production. I remember David, my co-anchor, asked you last time on any updates when it comes to some of your overseas factories. You're pretty mum on the details. Yeah. Can you give us any sort of update this time around?
Sure. Sure. So last time we left at the statement that the new factory in Southeast Asia will be starting to operate by late 2026, early 2027 from a country with great food. I feel like I have to be a little more specific about it. So now I can comfortably tell you it's a country with great tom yum soup. Hopefully that's sufficient.
Oh, Southeast Asia, Thailand.
Yes. It's
Can
in
you confirm
Bangkok.
it? Oh,
Yes.
Oh, great. Can you give
I
us
don't
a
think there's
timeline?
any ambiguity about tom yum soup. Late 2026 operation and early 2027.
Great. Obviously, Southeast Asia, I know, has been your key focus as well. Maybe I want to get more on maybe the domestic side of things as well. Just given the fact that it seems like humanoid robots. I mean, XPeng certainly made the news the last week as well. It's just been getting so much attention. How do you think Hesai and the LiDAR industry can really benefit from this sort of surge in the sector?
Definitely. First, I wanted to cite something from one of my favorite entrepreneurs, probably also one of your favorite CEOs, Jensen Huang. He said that eventually anything that moves will be autonomous, which is very interesting because to me, anything that's autonomous moving is likely to have a 3D sensor or multiple on it. So we're talking about many industries, right? We call them robotics. Robotics include robotaxis, including different applications like robo trucks, last mile deliveries, lawnmowers, service robots, cleaning robots, AGVs, factory automation, agriculture, etc. And we're actually on all of those industries. But this quarter, the most exciting one is actually the robotaxis. For robotics, we're shipping 14 times year over year this quarter. So this is completely exploding the volume. But then if you look at robotaxis, this is the key focus for this quarter because we're seeing, let's call that the light at the end of the tunnel. And everyone is seeing this possibility that we'll eventually have cars without drivers. And let me remind you the significance of it. Again, this is from another entrepreneur I do like, but he probably doesn't like me, Elon Musk. He said that the entire significance of such a industry is that you're going from the utilization of a car for 2 hours per day to probably 20. So you're increasing the value of such a product by 10x, which is crazy. Because anybody who could do that, you're looking at a lot of money to be made. And now we're looking at almost all the major robotaxi players starting to take off. Like we're talking about WeRide, Pony AI, Hello, JD, and in the US, it's Emotional, and a few more. I won't be able to mention names, but they're using our sensors, or they're using up to 8 LiDARs per vehicle.
David, we're getting to a hard break. We have to go. Thank you so much. David Lee, co-founder and CEO of Hesai Technology, joining us from Shanghai. We got plenty more to come. This is Bloomberg. Welcome back to the China Show. Here's a look at the HSI a half hour into the session. It is hump day and looks like things are, we're heading up the hump right now when it comes to risk assets. And Hang Seng is doing okay in the face of all this. We're up 0.8%. Tech, though, we're seeing mostly is heading lower here today. Of course, there has been some concerns. This whole SoftBank, when it came to selling its entire stake of Nvidia, that's sending a bit more wobbles in the whole AI trade here this morning. And also, we're watching some extensive losses here when it comes to the likes of some of the big tech in China too.
Yeah, actually pretty much under pressure across the board. XPeng is an interesting one because yesterday the big story was them around the robotics build out and some optimism. So it was a huge surge for the stock. But Alibaba, for instance, maybe a bit under pressure as well because we had JD, for instance, reporting very strong single-day sales figures and so putting a bit of pressure. But I really do want to recap Hesai because we just had a great interview with David Lee. And when he said they were building a factory in the country famous for tom yum soup, you knew exactly.
You should have seen Belle's face. Belle's face was scratching her head.
Panicking.
But he put us on the spot, mind you, like live on TV to guess which country he was talking about.
You knew straight away.
But, you know, as a fan of Tom Yum Soup, I was like, Thailand! Okay, yeah. Bangkok, right? He mentioned about building that first overseas factory in Thailand. I love when CEOs break news on our show. Keep doing it, please. Keeps us on our toes. But, you know, what he mentioned was the stock, though, was down close to 10% when we asked him, you know, what's going on? Why do you think investors are a bit disappointed in your results? He says maybe because ASP is getting lower. Yeah, which he tried to counter that in some ways, too.
Well, I think it's interesting, just when you talk about ASP, I mean, LiDARs, the individual units used to sell for hundreds of US dollars per year, and it's just been every year cutting 50%, 50%, 50% as they build out market share, build out their partnerships with major OEMs as well. So he was just saying, look, it's no surprise, and they've been able to maintain their gross profit margin, for instance, and just don't read into ASP so much. But that was, anyway, the key takeaways from her side. Let's take a look at broader markets today as well, because actually we've got Asian equities that are moving to the upside. Tech is the story that's under pressure today, but you do have signs for optimism. There's firstly, you had these signals, for instance, the US government shutdown could be nearing the end. Adding to that as well is really what we had around Treasury moves rising across the curve, but that private sector data signaling a cooling US labour market. What does that mean for the Fed and these bets of further easing being on the table? Let's get more now, though, on how markets are faring this morning. Bring in Bloomberg MI strategist Mark Cranfield, who's with us here this morning as well. And Mark, yeah, I mean, lots to unpack. So what's standing out for you?
Yeah, you can see that the healthy part of the market is the rotation away from tech. We saw it last night in the US markets as well, where the S&P 500 actually rallied on very good breadth. We've been concerned about it recently, but it started to improve a lot yesterday. Obviously, the fact that Treasury yields have reopened and they're lower, people thinking that the Fed will still be on target for lower interest rates in this cycle. I mean, traders are still pricing for 75 basis points worth of cuts over the next year, taking the Fed rate down to about the 3% area, which hasn't really changed very much for several months. We've been targeting pretty much that same level. So although the pricing for December is not fully pricing for an interest rate cut, there's plenty of time to get back on board for that, and that's where traders seem to be coming. But it's pretty healthy that you're seeing people able to sell the tech sector but move into other places where they see there's resilience and the market is still doing okay. Obviously, there's some overhang with the Chinese tech names in particular because SoftBank sold Nvidia. People are reading that as a signal they may want to unload other holdings. Not that, I mean, in the short term, of course, people should take notice, but SoftBank doesn't have a very good track record of selling stocks at great levels. It sold Nvidia in 2019. Ever since then, the stock went higher and higher. So maybe looking at SoftBank is not a great indicator of where tech is going, actually. But anyway, at least for today, people are concerned about that. But we do have big earnings coming up. Tencent, JD, Alibaba is likely to come up pretty soon as well. Any one of those could reassess the market and convince people that things are still pretty good, at least for the near term anyway.
Yeah, I still remember, I think it was just, last month when Masa and Jensen Huang were together and they were talking about how much, SoftBank once owned in terms of Nvidia, and then Masa just put his head on Jensen's shoulder and just kind of, really kind of regretting it in some ways. And it's interesting whether he's going to regret it again this time around, Mark. You mentioned about the SoftBank slump, though. You're thinking Japan can actually stay kind of resilient despite this drag that we're seeing from the company today?
I've got myself in a mess over this one before. I can remember about a year ago trying to convince my colleagues that SoftBank was a really big deal after their earnings, that the next day SoftBank shares were going to go down. And I was trying to convince everyone, yes, this really is a very bad signal for Japanese equity. And of course, I was wrong. And so I think I've learned from that. SoftBank is not as influential on the overall Japanese market as it had been a few years ago. And that's really what you're seeing going on here today. People are looking past it. There are so many resilient parts of the Japanese market away from one company. And yesterday we saw Sony, tremendous earnings from Sony. They're on a very good tear. The banking sector is doing extremely well. There's plenty of other people in the manufacturing space as well that are having a good time. So one company does not trigger a downturn in the whole market. And that's partly why you're seeing the Topics Index have a pretty strong day today.
There you go. We're showing that sort of hug, that awkward hug between Masa and Jensen Huang there from last month. All right, Mark, thank you. Mark Cranfield, let's hope you're right, our MLI strategist joining us out of Singapore, talking about the pulse check here when it comes to markets. And really when it comes to all this, one of the key macro themes that we've been focusing on of late is, of course, the dollar. It's regaining its crown as one of the world's most appealing assets. And it's a comeback that's defying talk of this so-called sell America trade and has raised questions about the outlook for the global reserve currency. Let's get to our chief correspondent for FX and rates in Asia, Ruth Carson. She joins us now. So this whole dollar carry, I mean, what are the numbers showing us? And what does it show us about whether this whole kind of carry trade comes back in a big way?
Absolutely. Great question. And it's amazing because if you had asked me this question, Yvonne, 6 months ago, I wouldn't have been able to say what I'm going to say to you right now, which is the dollar is incredibly appealing as a carry currency. And it's really defying all the talks around debasement, around sell America. I mean, back in February, we saw, the dollar peaking and then basically crashing down in June, July, and everyone was going, you can't find a dollar bull anywhere. And here we are today, close to the end of the year, with all the trade tensions that we're seeing in markets and the dollar going, you know what? We can give you, if you're long dollar, short yen, short CHF, for instance, Swiss franc, some of the best carry returns when you actually take volatility into account. Now, it's smashing stock markets, bonds, Chinese bonds, European bonds, take your pick.
Yeah, so why is that happening exactly?
So again, great question in terms of trying to unpack that. It is incredibly nuanced with many layers. So if you look at stocks, for instance, particularly US equities, we know that there's lofty valuations. We know that investors are worried. Investors are incredibly worried about, Meta, Nvidia, or the AI tech-fueled rally. So things are expensive, which means that volatility could also suddenly spike should there be a sudden meltdown, should there be a sudden spike of selling. So that's stocks. On the rate side, for bonds, obviously that's incredibly tied to what central banks are going to do, whether it's, Japan and Bank of Japan, and whether they're raising rates quickly enough through to the Fed. Will they not cut? So for the carry, remember that we have to take into consideration volatility as well, and that's definitely volatile.
It certainly is. And, in terms of the big macro trade, dollar yen is the key focus, as you mentioned, right? We're trading around 154 levels right now. What's positioning like on the yen now?
Yeah, again, when it comes to positioning, macro traders depend very much on not just flow, but official data. And as we all know, the government in the US is still shut down. CFT data is not available to traders to look at. But one thing we do know is that dollar yen on any given day goes between 153, 152 to 155 at the moment. Now that, when you think about it, it's not that far off the 160, 195 mark that we saw in August last year, when we all remember that fateful day when the carry trade meltdown sort of whipped global markets into a frenzy. So what does positioning tell us on dollar yen right now? Everyone is in waiting mode. They all know that yen looks incredibly cheap at the moment, but will the Bank of Japan raise interest rates quickly enough to appease, the yen bears out there, and also those that are looking to buy JGBs? All of this is making for an incredibly interesting cocktail when it comes to dollar yen trading.
All right, Ruth, thanks very much for joining us. That was our chief correspondent for FX rates in Asia, Ruth Carson there. And still ahead on that China show, we're going to be joined exclusively by the CEO of the Hong Kong Sovereign Wealth Fund. That's to discuss where they're seeing investment opportunities. So Clara Chan from HKIC joining us in just a couple of minutes from now. This is Bloomberg. Watching the China show this morning and taking a look at how we are going in mainland and also Hong Kong markets. About 45 minutes into the session, actually you're seeing some positivity across the screen. I'm just taking a look at trading volumes For Hong Kong, we are actually a bit under pressure so far, a bit lower than what we'd be on a 20-day moving average basis. But generally, a few different sectors are standing out to the upside across the Asia-Pacific region. Healthcare, materials, consumer staples, it's tech that's very much under pressure today. But let's shift on now and take a look as well at the Hong Kong Investment Corporation, because it was established 3 years ago. The mandate is to enhance the city's long-term competitiveness as well as deliver a reasonable financial return over the medium to long term. So it's been focusing on tech investing, including core tech, biotech, new energy as well. So let's get an update on their investment outlook. Bring in its CEO, Clara Chan, who's joining us this morning exclusively. So Clara, thanks very much for the time to come into studio as well. We know that you're working on a report and some sort of details on exactly how you're performing at the end of last year, but what can you share from us, maybe some of the highlights that might be in those figures?
Well, first of all, good morning, and thank you so much for having me today. As Annabelle mentioned, we are working on a number of deliverables and also the sharing and disclosure of those to the public. To take a bit of snapshot, I think to put into context, we have a dual mandate. So first is to deliver financial return, as you said, because we are a long-term professional institutional investor. At the same time, we, as part of the Hong Kong team, we want to reimagine the power of public capital and also bring benefit to the economic growth of Hong Kong. So in that context, to share a bit of the data points. First of all, in terms of the capital deployment and also the investment income, as of end of last year, we have deployed in underlying projects less than 20% of our initial size of capital. And at the same time, we have recorded more than 2 billion Hong Kong dollars in terms of investment return. And this is actually in perfect alignment with what we are set out for, because we want to move ahead very quickly, cast the net as wide as possible to capture good companies' potential growth of Hong Kong, while at the same time we need to balance investment risk. So we move quickly, but then we start small in each and every deal. But when they grow and also ahead of or meeting our standard, we put in additional capital. So I could also give you one example, because there are deals that we have been investing in them in a repeated mode, just like what I've mentioned. A few days ago, like on Monday, we announced our leading this round of financing in a company called Cornerstone Robotics, basically a surgical robotic company. And in this current round, we have also brought in other sovereign wealth fund and also leading industrial leader to the company.
You mentioned you deployed less than 20% of your initial size of the capital here right now. What do you make of the pacing of that? Do you think that you said things are going quickly, so you're comfortable with the pace so far?
Well, we have different stages of our plan in terms of deployment. The first stage, I would say from start to around middle of 2024, we try to cast the net wide enough to move very quickly, because that's the only way we could capture and have a stake in good companies and translate that into growth impetus for Hong Kong. So we invest in currently more than 150 companies, but as you said, as of last year, we deployed only less than 20% of the capital. But this is for a reason, because we need to balance the speed with also the investment risk. But at the same time, I could also share other dimensions of how we leverage the capital of others in terms of making investment. We always quoted a capital multiplier ratio of 1 to 6, meaning that every dollar we put into work in the underlying project, we were able to attract other market long-term capital of more than $6. So you could imagine that with our less than 20% of capital deployed in underlying projects, we actually bring in much more from the outside world. The other example is also that apart from our own core capital, core pocket, thanks to the government's support, basically we have other capitals where we could also manage or oversee the management, such as what we call the CIESIP, the Capital Investment Entrance Scheme Investment Portfolio, where for this round, for the 2025 capital batch, we just issued the investment or invitation for investment proposal 2 weeks ago. So basically that's bringing us an additional, I think, at least 2.8 billion for deployment with different managers.
So less than 20% of the initial capital deployed across around or more than 150 projects. So it sort of tells me the amount of money that you're investing or HKIC investing is relatively small for each of these companies. Maybe they're more early stage, so it's an appropriate level of investment. But would you be looking at taking a bigger bet for instance, and putting a lot more of your capital to work in one or two particular businesses?
Yeah, that's a great question. And that's also the second phase of our plan. Because as I said, from the very beginning, we need to be very cautious because it's public money. We want to place the bet in the right company. So usually what we do, we place it in a small way and we set milestone. Once these companies or partners, they hit the milestone, and by the way, I think it's music to our ears. A lot of them have been growing much quicker than expected. So once they have that, we have the right to invest more. So that's the example of Cornerstone. And talking about the fact that this is now another phase of the development, I am actually seeing the great trend of starting the second half of 2025, which will also go into 2026. As Annabelle mentioned, we will be doing a lot more partnership with regional and international partners, and we will be investing with a larger scale and also in a more systematic manner in different themes.
Can you tell us more about who these partnerships are? Can you give us any more?
Yeah. Well, we actually have a circle of friends around the world. So those could be sovereign wealth funds and long-term partners or long-term capitals like pension plans from around the world. And we also see a lot of inward inquiries from the big corporates in different parts of the world. For example, in Southeast Asia and also Middle East. A lot of them, I think they are seeing great potential and investment opportunities in Hong Kong or through Hong Kong into Chinese mainland, noting that we are natural beneficiary as part of China to benefit from the growth impetus. And also, equally importantly, on innovation and technology, I think a very good story is R&D in Hong Kong, but at the same time, we also take good advantage and in terms of the manufacturing chain and the value chain with other sibling cities in the Greater Bay Area.
You mentioned the Middle East, and I think that we've seen that huge trend. It's very clear now. Investments in China, Hong Kong being the conduit, Middle East as sort of a big investor, and the sovereign wealth funds are very powerful in the Middle East, big investors in tech in particular. Which ones would you want to work with the most, or which ones are you looking to work with?
Well, we are very open-minded. I think our worry today is we don't move ahead quick enough to find the best partner for specific themes. And as we earlier mentioned, there are different themes that we look at: hard and core technology, biotech, and also green energy or new energy technology. So who are the best partners? I would say it really depends on the sector and what the wisdom and the resources and the perspective that they could bring to the table. And I think it's not only like channeling the capital from them. We need to think about the recipient companies. So what do they need? So I think for us, we are very cognizant that we need to be like a middle person, super connector, super value adder, but with the full understanding of what both sides needed.
You have 4 different sort of portfolios, right? The Hong Kong Growth, Greater Bay, the Strategic Tech Fund, and the Co-Investment Fund. Can you tell us how each of those are performing?
Well, I think those are performing well, particularly the Strategic Tech Fund, because as you could imagine, it is very, very focused on innovation and technology, and we are doing great on that front. And I would say that we talked about the investment income earlier, more than 2 billion Hong Kong dollar with less than 20% of our capital. A lot of the growth drivers, I think, have been from the biotech companies because they have been growing really good in terms of the growth trajectory. And a few examples in terms of the growth, which are validated by objective facts and also other investors. Number one, we talk about the listed companies. 2 of our portfolio company already listed in Hong Kong, generating double or triple digit of IRR respectively, and more than 10 companies already filed for IPO in Hong Kong this year. Apart from that, it's not only about IPO, but possible talks on M&A, and a lot of up rounds in terms of the company's growth after we invested. And so, as I earlier mentioned, we always want to extend and expand our reach of partnership to have even more systematic, larger scale partnership with regional and international investors, because the potential is really great.
This less than 20% of capital that's been deployed, that's the end 2024 figure.
Correct.
Yeah, can you give us an update then for 2025? What's it going to look like, and what does it look like into next year as well? How much are you going to have deployed?
Well, definitely it's growing, because as I said, as we move from the first stage of starting small, this is the stage where we're scaling up, both in terms of getting to know the company, and for those who have done well, we double up, and then we need will lead the additional round. So this number is going to grow. And the other dimension, as I also just shared, we're going to form partnership with other investors in this region and also internationally. So those definitely also look to deploy capital in a scalable manner.
Clara, it's great to have you. Clara Chen there, CEO of Hong Kong Investment Corporation, joining us here in our Hong Kong studios with an update, of course, of how things are looking. Of course, you can get an insider's guide to the money and people shaking up and the finance hub here in Hong Kong. Our Hong Kong edition newsletter, that's out every Thursday. You can sign up through our website, bloomberg.com/newsletters.
Alrighty, some of the big corporate stories that we're following this morning. And Elliott Investment Management is challenging Toyota Group's plan to take Toyota Industries private in a $31 billion deal. The activist hedge fund says the current offer of 16,300 yen per share is too low and that it lacks transparency. Elliott now holds nearly 5% of Toyota Industries. That's fueling expectations for a higher bid.
Well, the LVMH is said to be gearing up to open major stores in China next month. Sources say 4 LVMH labels, including Louis Vuitton and Tiffany, are set to open multi-story stores in Beijing this December after years of development. They also say the conglomerate is in talks with a developer, I should say, to open a new Christian Dior store in Shanghai. I mean, you look at that LV boat in Shanghai. That's certainly
a masterpiece.
It's beautiful. Next to the roastery as well, Starbucks. All right, taking a look when it comes to markets, we're looking at aluminum, right? This is sort of like the AI play. You take a look at what we're seeing. Here's aluminum holding near some I think it's the highest in about a year in terms of aluminum futures in Shanghai. So there's been record volumes of late here, and really this kind of a lot of enthusiasm for the metal. And the likes of Matty Zhao from Bank of America just recently really did tell us, aluminum shares are the most undervalued in China, given the fact that there's construction of data centers, AI, power equipment was really fueling that consumption.
Yeah, and quick check as well on lithium stocks in Australia, because these are as well reacting to moves in China, but essentially China's royalty reform. We've got a note out from RBC Capital Markets saying that the sector, Australian lithium miners, could benefit from those changes, but we'll have plenty more ahead. This is Bloomberg.
All right, it's close to 11:30 in Tokyo. Japanese markets are heading to that lunch break in just a moment. And yes, it actually is looking okay. We're up just about a fifth, 1%, but the Topix is doing much better. We're at 1% gains here right now. I guess when it comes to SoftBank, that is the one that is the big drag here today, just given that news of them, selling that stake, an entire stake of Nvidia. So that is why maybe we're seeing the Nikkei a little bit there, a bit heavy. But in the most part of things, we are seeing actually some good value and some big moves across some of these other sort of value plays here this morning as well in Japan. That seems to be stealing the spotlight here as we see these wobbles in AI. SoftBank shares now, we're off some of the lows already, but we're still down some 6% for the stock.
Yeah, and as you said, it's really that sort of rotation we're seeing maybe away from big tech in Japan. But let's shift to Singtel now, because as well, that company reporting their earnings, they're expecting to book a higher operating profit for the full year. That's after they had strong numbers in the first half. But the group CFO, Arthur Lang, told us it's too early to figure out the amount of any penalties. That's, of course, what's been a really major story in Australia, which has been the outages at its Australian unit Optus.
Optus does contribute a large portion, almost 50% of our group revenues. But when it comes down to underlying profits, I would say it's slightly less than 10%. So having said that, the incident that happened a few weeks ago is something that we are extremely, regretful. And I think it's created a lot of unhappiness with our customers in Australia. And this is something we're taking very seriously. There's been an independent inquiry panel that has been established. We're letting the Dr. Kerry Scott actually do her independent review and then come up with the findings hopefully by end of this year. And we need to accelerate our transformation initiatives on risk management, process governance, and resilience. So this is something we are very focused on. But if you look at the first half results, I would say It's given, I think we've done pretty okay as a group. It's up, underlying profits are up about 14% year on year. And it's really driven by the portfolio effect. I mean, in addition to Australia, we have Airtel in India, AIS in Thailand, which have done extremely well. And also our NCS, which is our IT services business. I think you've seen a very nice improvement on EBIT. So despite the uncertainties in Australia, I think we are confident. We definitely have to do something, and we're doing a lot more and really supporting the Optus management and the board in Australia. But as a region and across the portfolio of our businesses, I think we have done, I would say, reasonably well, 14% up in underlying profits.
I guess the drivers of growth are undeniable, but on those uncertainties related to Optus, have you learned anything further about the potential financial penalties that might be imposed either on Singtel or on Optus, and what sort of provisions might you be making for that?
We of course will work very closely with the authorities and the government on that. I think it's too early to discuss and figure out what the actual number is, because there is inquiries that are happening right now. The independent panel is also doing its work, so it's a bit too premature to talk about it. Nevertheless, based on what we have done in the past, not just for Optus but across our businesses, if ever we think that there is some certainty to the penalties and to other types of expenses that are related to the incident, we would definitely take provisions, and we have been fairly conservative on that front. So we have taken what we can and what we need to do at this point in time.
And that was the Singtel Group CFO, Arthur Lang, there speaking to us earlier. And we're going to be live from Singapore next. The city hosts the Singapore FinTech Week. Our interview with Stripe is next. This is Bloomberg. Well, Singapore's 10th annual FinTech Festival begins today, bringing together investors, regulators, and industry leaders. Let's go there now live to our Bloomberg Insight anchor, Hesai Ahmed. She's there and standing by with our next guest, Hez.
Hey, Ron, we're talking cryptocurrencies, tokenization. We're also talking about agentic commerce. Let's get perspective. Paul Harrop, head of APAC in Japan at payment processing company Stripe. Good to have you with us.
Thanks, Linda. Great to be here.
APAC is key to your growth strategy, but it is a very fragmented market. If you take a look at Singapore and Australia, they're big on digital adoption, but when you talk about Japan, it's still very cash-driven. How is that shaping the strategy in this part of the world?
Yeah, well, we look at it from a position of how do we increase GDP of the internet? And our real focus is helping merchants grow. So how we look at that across all these fragmented markets is a part of where they are in their journey. So as you said, Japan is very cash-driven, but they have a big market drive to digitize payments. Southeast Asia, I think, is one of the most innovative payment market in the world, with real-time payments coming through. Stripe's infrastructure supports all of those payment methods across the world, and also enables themes that we're seeing that are common across all of the countries in Asia, which is cross-border trade, agentic commerce, and we're seeing more and more interest in stablecoin as well.
Stablecoin is huge. They say you can do it 24/7. And it is a market worth something like $4 trillion. But if you take a look at a player like Ant, for example, is only doing about $1 billion. Why is there no traction? Why is there still no scale?
Yeah, we see that it's still early days for the use of stablecoin, but at Stripe we are seeing a lot of traction. So we're seeing 100 percentage points growth in use of payments. We've enabled payments within the Stripe infrastructure.
It's from a low base, though, right?
It's from a low base, yes, but it's growing exponentially. And so our thesis over the next few years is that stablecoin will underpin a number of important trends, agentic commerce being one. Organizations using stablecoin to manage their own treasury around the world, and then cross-border trade, because stablecoin, unlike the Telegram era SWIFT systems, is fast, it's open, it's cost-effective, importantly, and it's programmable, which means you can build the services into the services that you're offering, which means things happen really, really fast and in a really relatively safe way as well.
So is it cross-border that is driving that growth, or is it things like remittances? I mean, if you take 12, 24 months down the road, what are you looking at?
It's a bit of both. So we've turned on payments. So Shopify, for example, which operates all around the world and is an important Stripe customer, we've worked with them and they've turned on stablecoin as a payment method. So you can pay for their stablecoin if you're in Australia or if you're in Argentina for a product on their site. So we're seeing strong growth in that area. The other side is remittance. So for example, in the creator economy, you have platforms that are allowing people to create all of this content, and those content makers are actually in 200 countries all around the world because content is borderless. But how does the content company who is collecting the money pay out to a creator, say in Bhutan? Well, they're starting to leverage stablecoin to do that much more effectively. And I have a customer, for example, that is selling cars from Japan, second-hand cars into Africa. And their biggest business problem is that their users, their customers, have to bring bags of US dollar cash with security guards with machine guns. And so we're solving that problem with stablecoin.
Paul, where are the bottlenecks? How does Ant get from 1 billion to more than 100?
Well, I think there's a couple of areas. So Stripe has bought a company called Bridge. Bridge is enabling the infrastructure for stablecoin. You can issue your own stablecoin as a company. We've also bought Privy, which allows you to build your own wallet. And now we're building Tempo, a $500 billion valued company, which is layer 1 blockchain. The problem we're solving there is that the existing chains are built really for transactions, Bitcoin, Solana transactions, not trading transactions, not payment transactions. So 50, 60,000 transactions a second is not going to do it when you're operating globally. We need millions or tens of millions when everyone's using stablecoin to do their payments. So we're now building that as a separate company, which again will be open to any company to leverage. And then when you look at what we've announced with OpenAI, the Agentic Commerce Protocol, which again is an open protocol that enables agents and merchants to leverage open tokenization for global trade, stablecoin will start to play a really important part in that network of agentic.
You talked about how cross-border is actually driving that growth. Given the US-China tensions, do you see that impacting volumes in any way?
We haven't actually. We've seen that all of our customers on the Stripe network continue to grow. There may be nuances to country relationships, but at an aggregate level, we're seeing the overall businesses grow. And what I found with merchants, particularly our Asian merchants, is they're so driven, there's so much activity to succeed that, you know, if one path isn't optimizing for them, they'll find another one very quickly. And they can turn on a new country and start trading within hours with Stripe. And so that's what we're seeing.
What kind of growth are you anticipating, Paul? I mean, if you take a look at growth in Asia versus the US and Europe, where does the region stand?
Well, in our goal of growing the GDP of the internet, when Stripe started 14 years ago, APAC represented 20% of global GDP. We now represent 40% of global GDP. We have a vast majority of the world's population. With Southeast Asia, India, the highest digitizing payments market in the world. So the opportunity is huge. And so what we're seeing is that our merchants are trading amongst each other. More than 55% of Stripe's business is cross-border trade. In fact, in Singapore, it's 65% Singaporean companies cross-border trade. And that's not just within Asia, it's globally. So we have companies like Canva, Minimax, Manus AI here in Singapore, all expanding globally and customers in many, many countries. In reverse, we're seeing a lot of our global customers from America, be it Shopify, Amazon, Microsoft, Salesforce, all trading into Asia across all of our countries. So
what are the key factors that will drive and shape, you know, how business is done digitally?
Digitally. I think simplicity. So merchants want to grow. we've seen that simplicity in the financial global infrastructure is really key. Company wants to go, how do they do it? The old world, it took a very long time, very complex. You can now switch on a country and start trading within minutes. With Manus, we've just announced with them they're leveraging our agentic sandbox. And what that means is, all from within the Manus AI platform here in Singapore, you can build a website, build your commerce infrastructure, do all of your testing of payments, and when you're ready to go into production, simply finish your KYC authentication with Stripe, and you are in production taking money right now. So the speed that Stripe enables and the reliability. In fact, yesterday was Singles Day, not single, so I didn't participate. And then we're coming into Black Friday and Christmas. You see billions and billions of dollars of trade. Stripe runs at 6 nines availability. So we work with the biggest, the Amazons, the Shopifys, down to the smallest companies during that trade period. And a lot of that is all cross-border
It
growth.
comes down to trust in the end. You talk about agentic commerce. Trust is key to get both sides. How are you addressing the issue?
Well, the way we're addressing is a couple of ways. One, companies will trust Stripe because we're trusted, we're reliable. The world's biggest and smallest are using Stripe. We've also listened to our merchants about what concerns them on agentic commerce, and part of it is they want the customer relationship. And so, as part of the ACP we built, the agent makes the purchase. Think of the agent as like a personal shopper. But the ultimate purchase, whilst tokenized card, actually the information passes through. So the merchant knows that I'm buying. They know my address because they're shipping the goods. And all of that is contemplated within the ACP. So the trust remains because the merchant feels comfortable that maybe instead of a Google search click, it's now coming from OpenAI or Manus, but they still know their customer. It's just an optimized way of searching. And we've seen 1,200% increase in agentic commerce over the last few months. Again, it's a small base and we're just growing. But since we made that announcement 4 weeks ago, the interest across Asia and the world, in fact, has been tremendous. So I can only see agentic playing a huge part in our future. And I actually believe merchants who aren't thinking about this will put themselves behind because I believe this is how we'll do commerce over the next few years.
All right. Paul, thank you so much for that. Paul Harapin of Stripe. And Belle, handing it back to you. It does seem like agentic commerce is the buzzword these days.
Yeah, it's absolutely right. And you can hear that conference is sounding very busy behind you as well. So enjoy the event. But that was Paul Harapin there of Stripe, and our Bloomberg Insight anchor, Haslinda Admin, joining us. And another big interview actually coming up later with Haslinda. That's with the Bank of Korea governor, speaking to us exclusively on Bloomberg television. So you can catch that conversation on Insight with Has later this morning. We'll have more ahead. This is Bloomberg.
Well, deadly blasts in the capitals of India and Pakistan are raising concern of renewed tensions between the nuclear-armed neighbors. A suicide bomber blew himself up on Tuesday outside a crowded court building in Islamabad, and that followed Monday's car explosion near New Delhi's historic Red Fort. Let's bring in our chief Asia correspondent, Rosalind Matheson, with the latest. Ros, I believe this happened within 24 hours of each other. Can you tell us what's the latest now?
Well, that's right. So these two incidents have happened quite close to each other. We don't know if there's any link between them, if there is a connection, but obviously they've happened, in close proximity. In India, they're still investigating the cause of this exploding vehicle. Officials in India are being very careful in that regard. No one seems to have claimed responsibility. They're saying they're investigating. Obviously, the anti-terror unit is involved. In Pakistan, you had a suicide bomber who blew himself up outside this court in Islamabad. Pakistan has come out very quickly to point the finger at India, but not presented any evidence for that. And of course, that just raises tensions between these two countries, whether these incidents are linked in some way, what the causes were. Regardless of that, it comes just months after we saw those very direct clashes between India and Pakistan, military clashes, and that's very much front of mind. And obviously the desire would be on the part of other countries, including the US, to ensure this does not lead to a resumption in anything like that. But, you know, Pakistan's rhetoric overnight accusing India, that may lead India to feel they've got to, again, give some kind of response. And within India, perhaps some political pressure to take a stronger line.
Yeah, as you said, that military clash earlier this year, it was actually only in May, right? So it's certainly very fresh memory for both sides, and raising that risk again that we see further violence, as you said. So you mentioned the US. What's the odds of them getting more directly involved in this?
Well, Donald Trump, the US president, got very directly involved, according to him at least, in that episode of violence back in May, and claimed that he'd worked very directly to get that ceasefire between India and Pakistan. In fact, Donald Trump claiming that really upset a relation separately between the US and India. But Donald Trump will have a keen interest as a result in what's going on with these latest developments, perhaps his personal prestige in wanting to ensure that there's no resumption of direct military tensions between India and Pakistan. So certainly be interesting to see if the US starts to insert itself again. On the other side of the coin, of course, there's also China, and China has supported Pakistan with, you know, supplying them with military equipment in the past. Does China have an interest here? And if so, what are they saying about it? So seeing those two great powers and what they may want to do or say with all of this. But really the sense will probably be that no one really sees it in their best interest to have a resumption of direct military tensions between these two countries.
Roz, thanks very much for sharing the latest on that situation with us. That was our Chief Asia Correspondent, Roz Matheson, there in Singapore. And here are some of the other stories that we're tracking this morning. Well, France is urging Europe to reduce its dependency on China in key industries, including rare earths and other critical materials. Last month, President Emmanuel Macron called on his EU counterparts to consider using the bloc's most powerful trade tool against China. That's the so-called anti-coercion instrument. The French European Affairs Minister Benjamin Haddad also told us the continent's leaders must have the ability to defend their interests.
We have trade relations with China, and it's important, but we should also be able to safeguard our own interests and protect our key strategic industries. This is why the European Commission last year adopted tariffs against electric vehicles coming from China that were heavily subsidized. This is why the Commission also is proposing a safeguard clause on steel to protect our steel industry when you have overcapacities that are coming to destabilize our markets and our companies in the European markets.
China's cybersecurity agency has accused the US government of stealing $13 billion worth of Bitcoin. The theft in 2020 was one of the largest crypto heists in history. In a report last week, the Chinese agency says it was probably a state-level hacker operation led by the US. Washington has said the tokens are associated with Cambodian businessman, that's Chan Ji, whom the US has charged with wire fraud and money laundering.
All right, switching gears now and talking a bit more about earnings. And we're checking, of course, Chinese LiDAR maker Hesai Technology after it announced it's building its first overseas factory in Thailand. On our shows just in the previous hour, co-founder and CEO David Lee told us that exclusively the company expects to ship 600,000 units in the next quarter alone. The company had already forecast a jump in net revenue for the fourth quarter up between 39% and 67%.
Last time, we left at the statement that the new factory in Southeast Asia will be starting to operate by late 2026, early 2027 from a country with great food. I feel like I have to be a little more specific about it. So now I can comfortably tell you it's a country with great tom yum soup. Hopefully that's sufficient. Yes, it's in Bangkok.
You know, I'm so glad that
they didn't show our faces.
Well, they didn't show our faces, firstly, but secondly, you're obviously more au fait with different Asian cuisines, because he said tom yum, and I was just thinking,
Belle's face was
it's
like,
Asian, and you've got me at Asian.
It's okay. I got your back. I'm always good with the Southeast Asian cuisine. But yes, certainly it's interesting, Thailand, that they chose that location, right? We were talking about in the break that, you were thinking maybe it could have been somewhere in Europe.
Well, I was thinking Europe just because, of course, Hesai has some very large European manufacturing partners. And so I was thinking, you've seen, for instance, a lot of Chinese companies like BYD, for instance, that are moving to the likes of Hungary, and that's sort of building up their production facilities in Western Europe that's a bit cheaper. But I think Southeast Asia, of course, it makes sense. It's a major vehicle manufacturing hub as well. Cheaper labour costs, although I think it's interesting to note, I've spoken with David Lee about this in the past, their factories are so automated that there's basically skeleton stuff. It's a lot of robotics on those production lines.
Yeah. Less humans, more humanoid robots, really, as well. In terms of markets, we've got plenty of earnings to tell you about. SJM, Samsonite then reporting results label later on here as well. And take a look at the HSI. We're still off session highs, but we're up about 0.9%. That's it for us in the China show. Insight with Hesai is next. Stay with us.